And we are live. This is Travis Witherspoon from Carter Cow Capital, Carter Cow Trading on Instagram and on YouTube. Trade with Travis on YouTube. I hope everybody's doing very well on this Thursday morning. I have 7:12. I am late. I do apologize. I had to make sure that I end up getting everything straight from my school, my students, and everything else like that, and ran past a little bit of time when it came down to that. But as always, we're going to end up taking a look at the overall chart, see if there's overall opportunity that we can be able to do for us trading. And if we have that opportunity, then after that, we'll look at being able to trade. Now, I'm going to end up having a confession for you. And from that confession, I'm going to end up explaining why I feel this way. Now, let me go ahead and go through the disclaimer. Then after that, we'll go ahead and hop into that. And I give my small little rant. So I'm not a CPA, so I'm not going to tell you whether to buy or to sell. What I'm going to do is teach you education, and from that education, you can be able to make your own informed decision about what you want to be able to do for Forex trading. Now, understand that Forex involves risk. It involves risk of being able to make money, also involves risk of being able to lose money. So please keep that in mind and understand that past performance is not indicative of future results, which means that if you end up making money yesterday, it's not promised that you're going to end up making money today. So once again, let's go ahead and start talking about my overall confession, because I want to get this out the way. It's something that ended up bothering me when I ended up taking a look at the charts a little bit earlier today. One, when it comes down to everything, yesterday was a very disappointing day, and it wasn't a disappointing day because I lost money. It was a disappointing day because I lost a lot of potential money, and I didn't go through my overall trading plan and just traded it like that, because a couple things. One, I was with my students, and quite frankly, I took my eyes off the ball when it came down to certain trades. Two, when I looked at other positions, the trade that I ended up talking about a little bit earlier with the Australian dollar, United States dollar, for us being able to scout the market, didn't get that. We are in a state of transition when it comes down to trades, and I want to talk about that in general. You want to make sure that you're uber aggressive on state of transition trades. What that means is one pair is going from being very dominant to starting to be very weak, and the pair that's being very weak at that particular position is starting to be dominant. Once you have that transition, there are certain waves in the market when you get it, especially in the first wave, that you have to be uber aggressive, because that's where most of your money is going to end up coming in. And this only happens maybe 1 to 2 times each year when it comes down to certain pairs. We look at what happened in March, from January to March. That's where we had a few days where the US dollar was this very strong, but from March all the way to where we are right now, the US dollar was very weak. Now the US dollar is starting to be a little bit stronger, and it just got into that point to where it is starting to be strong. And quite frankly, I dropped the ball yesterday when it came down to trading. I ended up having a very good day when it came down to trading in certain other pairs. The NASDAQ 100, I ended up making over $8,000, or very close to $8,000 in overall trading. But with the US dollars and everything else that we talk about here, I missed out on a potential maybe $3,000 for its overall movement. So sometimes you can be very disappointed in a win. It kind of goes back to my overall coaching background. So that's where we are when it comes down to that. Now, do me a favor. First off, the people that are in here, the people that are smashing that like, people that are in here, smash that like button. Please make sure that I know who you are. Type in the chat box. I want to be able to talk to each and every one of y'all. Hopefully, y'all end up having a great day when it came down to trading, because we talked about this potential opportunity, and we've been talking about this potential opportunity since the early portions of the summer. And we're definitely here at this particular point. I done had a lot of green days over the course of this last few days, so it wiped out a lot of losses that I ended up having because of trying to find these state of transition trades. So if you have not been paying attention to what we've been doing for its overall trading, that's, to be honest, that's shame on you, because we generated a lot of money for a lot of people. And I would like to be able to generate a lot of money for you. You hop inside of our Forex Trading Bootcamp. Now, if you want to hop inside of our Forex Trading Bootcamp, all you have to do is just go to facebook.com, go to the events at Carter Cow Trading, and be able to see some overall, be able to see an example of what we're doing. It's going to end up going September 28th to October 2nd. It's going to be from 9 p.m. to 10 p.m. Eastern Standard Time, and it's going to be 5 hours basically of overall trading and being able to teach you the overall basics and be able to get you to a point to where you know how to be able to find a broker, know how to be able to look at support resistance and a few other things when it comes down to trading, to be able to get you into the best position for its overall trading. Our last boot camp ended up generating almost $3,000 when it came down to certain students based off of the trades that we just did a couple of days ago. And one of my students right now is definitely making over, I want to say, 4 figures on each and every one of his trades at this particular point. So, I mean, keep your eyes out for it. Make sure that you end up clicking on that ticket. Make sure that you end up taking the time to be able to invest in yourself. Because quite frankly, if you don't invest in yourself, then how are you going to end up making this type of income? Just being perfectly honest with you. How are you going to end up being able to do that? Okay. Now, with that being said, let's go ahead and hop onto the charts. Wasted too much time when it comes down to that. And we're going ahead and hop into that from here. So let's talk about what's happening today. If we look at today is more of a today probably a little bit more of a transition day. When I'm saying transition, that means that the market has been very bullish when it came down to the US dollar. It has hit daily D extensions on multiple pairs at this particular point. So we are looking for the market to be able to retrace a little bit, meaning that we want the market to be able to go against the dollar for the next couple days, going into next week, whatever may be the case, so we can start to be able to get the market to be able to get a high price, get people to be able to buy against the dollar at this particular point, let the market be able to rise up. And then after that, once the market ends up rising up, then after that, we have a high price to be able to sell down again. Okay, so that's what we're looking at being able to do. We want people to be able to buy against the dollar. We need to have some small little catalyst, not anything catastrophic, but we need to have something to be able to make the dollar be a little bit weak. And it may end up being continued jobless claims and initial jobless claims because the U.S. dollar has been struggling when it came down to that movement. Chair Powell is going to end up testifying for the 3rd day this week, and then after that, Treasury Senator Munchin is going to end up speaking. He may end up talking about some type of stimulus check or any type of thing like that. Who knows? I'm not necessarily holding my breath on stimulus checks at this particular point, but to be something to pay attention to. And then after that, on Friday, we have non-defense capital goods. So this point, I think this is a transition day. I think this is more fundamental than it is being able to look at the charts for anything else. Currently, right now, we see where the market is. We can see that on the daily. It's definitely in an R3 zone. There's a D extension that has not been fulfilled yet at 12,174. I am going to end up being aggressive on certain pairs. I expect that if we look at the euro, United States dollar, and the U.S. Swiss franc, that we should be able to find some opportunity to be able to trade it up towards their overall D extensions, because they have not completed those yet. But once again, I'm looking for just a slight little high price to be able to get in. We've had 4 strong days of overall bullish movement. I ended up capitalizing on 2 of these days. I did not capitalize yesterday. Now, once again, that's the thing that I'm very disappointed at, coming from the way that I trade. But overall, this market is considered to be bullish. I will look at short-term trades that you can be able to get them. You take a look at oil. Oil has broken the trend line to the downside. It's still in the sell zone, but right now we're seeing a little bit of consolidation for this movement. If you're looking at upside movement, there is a potential sale that I'm looking at right around 42.45 if the market does go up to that level. If it does not go up to that level, it's done broken the counter trend line. So pay attention to smaller time frames and look and see if there's any type of selling opportunity from there. If we look at what's going on with gold at this particular point, we end up saying that this market had a D extension right around 1731 that we felt like the market was going to end up going into. Now, looking at it from a daily perspective, once again, we're looking at that state of transition. This is a point of control, right around 1855 is a point of control when it comes down to previous numbers. So I believe that what's going to end up happening is that, I believe that what's going to end up happening is that going into the rest of this week, we probably might end up seeing the dollar kind of push up just slightly, and then after that, give us another opportunity to be able to sell this one down to its overall position. Reason being is because I think that the Japanese yen is still probably the only pair that's a little bit stronger than the dollar at this particular point. So hopefully that makes sense when it comes down to that move. And then after that, if we take a look at what's going on with the NASDAQ 100, for the people that actually end up trading the NASDAQ 100 currently right now, we're looking at this market. This market is still considered to be bearish. Obviously, for the people that have not been with us or the people that have not been trading with us, if you don't know about the NASDAQ 100, basically it's a futures trade. And essentially what I can give you right now is that this trade gives you a lot of trading opportunity. There's a lot of volatility in the market. And quite frankly, if you understand how to be able to trade, Fibonacci's in the way that we end up trading from a Forex standpoint, you will understand how to be able to trade from a futures standpoint. The only difference is that you just have to understand your equity management, because equity management is a strong standpoint of being able to understand from a future standpoint. So just keep that in mind. That's where we're at when it comes down to this pair. So what I'm looking for is this. We can see that the 2 hour is basically going from the sell zone to the buy zone. I will look for a counter trend line break. Hopefully the market can be able to push up right around this moving average area, which would be about right around 10,958. If that does happen, then I'll look for a trade. If not, then I won't do anything with it. Once again, we end up making over $8,000 on that move yesterday. Have to be able to pay attention to what's going on with that pair. I don't believe that we're going to end up having like this huge shoot down of overall movement. I just think that what will probably end up happening is the market will probably retrace just slightly, and then after that give us the opportunity to be able to trade it going into next week. So let's take a look at a certain amount of pairs. First one I want to pay attention to is the Euro United States dollar, because we still have a few more pips on the daily that we have not hit yet. So if you look at it, basically what ended up happening, the weekly end up breaking the trend line, the daily end up breaking the trend line once again. Once you end up having a breakout, you have to have a retest. We end up getting that retest earlier this week. That ended up happening on the 20th. Once we end up getting that retest, the market ended up selling back down. We was able to capture a little bit off of this move, but this market has been moving down for the past 4 days, and the D extension is at 1.1593. Currently, the market is at 1.643 at this particular move. So it's going to end up being a lot more one-sided trading than there's going to be on any other pair at this particular point in time. So I will pay attention to the 2 hour and see if you can be able to get a high price to be able to get in. You would have got in at 1.17, then quite frankly, you would have been at a very good position. But if we look at it from a 2 hour perspective, the D extension has already been hit on this move, which end up getting hit right here on this previous swing, which I'm going to make a horizontal line on, which is right there. So the D extension has got hit on the 2 hour. What I'm looking for is that I want the price to be able to go back up and start giving a little push back up. Anything above 1.17 in the point of control or area where that would be, or better yet, anything above 1.160 will end up being a great position to be able to get into, to look at being able to sell down to 1.16, which will end up being that area where I think that the D extension will end up being on the 2 hour, and nevertheless going down to the position for the daily D extension on that move. So that's what I will be looking at right now at this particular point. I would not look at being able to get into selling right now at this particular point. Quite frankly, if we miss it, we miss it. This is not like yesterday where you end up having a lot of pairs at R3 levels, and a lot of pairs had to fulfill their overall D extensions. This is not that. This is one of the outliers on that overall move. So looking for a high price, and then after that, looking to be able to sell down at that particular point. We take a look at the US Swiss franc. Currently right now, we're looking at this move is at 92.50. Market did hit a D extension. Market has broken past the B high. Market is at a transition point where we should see that the area should start to fulfill. Remember, we're at a point of control where we end up looking at this position where there's a lot of light trading around this area. So I do expect overall, if we're looking at this market from a daily perspective and from a 2 hour perspective, that this market can hit 93 because we're definitely in light trading area. So this is what I'm looking for. I'm actually looking for a 15-minute entry. From that 15-minute entry, I want to be able to take a buy all the way up to that position, all the way up to 93, and from there, go from there. That's essentially what I'm trying to do at this particular point. We look at this moving average. We can see that this market has been bouncing off of the moving average and pushing back up. We can see that that happened in this area right here, bounced off right there. Basically went back into the pocket area, bounced off right there. Currently right now we're getting close to the currently right now we're getting to a point to where we may be very close to a market being able to bounce off again on this moving average. So if I was you, what I would look at is I'll wait for a counter trend line off the 15-minute. once this market breaks this counter trend line off the 15-minute to the upside, then after that, I will look at trading it to the upside and completely overall the-extension off of that move. Okay, so I'm looking at being able to buy up to 9,300. 9,300. Remember, it's the 382 of the long-term swing of this move. So I think that's a very good position of being able to go from there. The stop that I will end up having will have to be below the overall moving average. So if it does not hit the moving average, then I will place my stop below the moving average anywhere right around that 92.30 area. So it'll be about 20 pips for the overall risk. We're talking about reward. The reward that we're trying to get to is right around the 9,300 area, which would be about right here. So let's play this out. Let's go ahead and write this down as a overall plan. So looking for a long position. Let's say if it hits the moving average. Let's say if it hits the moving average and we end up going up to the extension, that would be about 55 pips for it to move. If we go from there, we want to have it just slightly below the overall stop, just slightly below the overall moving average from that point. Once we end up getting that as a trade, then after that, I would like to be able to push it in that position. I don't want my stop loss to be anywhere in this small pocket area. If the market drops below that small pocket area, then that means that it could quickly end up getting hit. So I will almost put my stop below the point of control, which will be at 92.11. So I would say right around 9,200 will probably end up being the area. Risk reward from there, make it a 1.1. I don't like that as much, but overall, if I'm trying to trade this and I'm trying to be safe, especially if I'm going to end up risking a little bit more, I want my stop just to be below the point of control from that position, and then after that, go from there. So that's where we are when it comes down to that pair. And looking to be able to get to it. The extension on here is at 93.13. I do expect that this market is going to end up hitting it. Once again, looking at being able to see if we can get a low price to be able to get in from there. I guarantee you look at the 5-minute. 5-minute is already at a position to where the counter trend line is already about to be broke. Point of control on this one, it's at 92.40. Quite frankly, you put it at 92.35. You could look at being able to trade it as well. So it's totally up to you about how you want to look at being able to trade this one. This one is bouncing off of the moving average as well. From there, I'm gonna be a little bit more cautious and look at it off of a 15-minute timer, and then after that, go from there as a overall trade. So I do like that as a trading plan, and then after that, move from there. Let's see. Moving on from there, let's talk about game plans for the other trading pairs that have hit the extensions and what we want to be able to do. First one we want to focus in on will end up being the Australian dollar, United States dollar. Remember, Aussie dollar and New Zealand dollar are the pairs that end up are starting to go from the transition of being very dominant to very weak, or starting to go from being dominant to being weak and being in a corrective phase. The point of control of what we're looking at being able to get out at, we end up being right around the 68.85 area down to the 66.50 area. And being able to look at that as a move, I think that very well could happen. So now we go to the daily and pay attention to where we're at, right now on this particular move. Once again, the reason why I was disappointed yesterday was because I didn't take advantage of this. I tried to trade it to the upside, which was, to be honest, was very stupid at that particular point. Lost very little, but as soon as it turned around, I should have went to looking at being able to sell it. The market moved by itself on this movement 108 pips from there, and currently this morning ended up moving another 52 pips. So literally just lost $1,500 based off of a move like that. And that's basically that's how serious these actual moves are basically happening when you're going through a state of transition. Now, a couple things can happen at this particular point. One, are people going to start looking at being able to take profit, and people going to start looking at buying? Or are there going to be a lot of people looking at selling at this particular point because they just believe that the Australian dollar is just going to go down from there, or keep on going down from here? That's very valid questions. And what I would end up saying is that if I'm looking at this overall move, currently right now, we're going through this third swing at this particular point. The last time we went through a swing, and the reason why I didn't get into the trade was because I felt like we wasn't high enough to be able to make this overall move and go up to the 382. That's why I didn't sell it at that particular point. Now, if we're looking at this move at this point, since the beginning portions of the summer, the market had just been moving up to the 236 by itself, and then after that, being given a trade to the downside. So, what I would look for is this. Currently, if the market is healthy, if this is going to end up being a healthy type of market trade, I would expect that the market would go up to the 71 area. Now, in this times where pretty much this whole year, when the market basically retraces, it's been retracing to the 236 only alone. So if I'm looking for just a slight retracement from this move, I will look at being able to see how this market is going to end up reacting based off the 236 and then going up. I don't want to jump into anything that quickly crashes the market right now. I just don't believe that that move is going to happen. I think that this is the last swing down to that 68.85 area, which would be the first take profit area from this overall position. Currently, right now, remember the US dollar is getting to a point where it's a little bit oversold. So I would expect that this market is going to end up rising up to the sweet spot area first before getting up to a sellable position. So I would like for the market to be able to push up maybe 100 pips to maybe 120 pips off of this move. Then after that, look at being able to sell it down. Once you end up looking at being able to sell it down, you're talking about another 150 to almost 200 pips from there, because if it breaks down and it hits this overall daily or point of control position, I think it's going to go to the 382 of the weekly, which means that we're talking about every bit 279 pips if it rises all the way up to the sweet spot, all the way till taking it to the daily D extension, which is about another 500 pips from this point. So I am interested in being able to see how the market is going to end up moving. My hope is that people start to buy it up a little bit more, and then after that, give me an opportunity to be able to get it on the when the daily ends up getting into the buy zone and going from there. That is wishful thinking, basically, from this position. So not trading it today. There's no reason to trade it today. Quite frankly, we're not in a position to be able to do so. US CAD, same deal. We look at the dollar. We look at this overall movement. We see that this market has hit that first position where we thought the market was going to hit fourth point of control at 133.80. That ended up hitting very strong once again. Did not trade on this pair yesterday, so missed out on this overall swing. But this one was a little bit different. The reason why it was a little bit different was because the daily D extension had already been hit. So what I'm looking for off of this pair is that I would like the market to be able to fall and be able to have a little bit of retracement. Once the market ends up falling and having a little bit of retracement, the area where I'm looking at being able to take profit at would be the 135 area once it starts to bounce back up, if it gives us that opportunity. If it doesn't give us that opportunity, then after that, quite frankly, this would be a wasted pair when it comes down to overall trading it. We end up making money off of it, but we didn't make the money that we were supposed to make. That's what I mean by saying wasted pair. But overall, you're going to end up seeing how the market's going to end up reacting off of it, and then after that, looking at being able to trade it once it gives us that reaction. Would love to see a retracement, a strong retracement off of this move, and giving us an opportunity to be able to buy going into later this week. Last pair that I want to talk about is the New Zealand dollar, United States dollar. Did not trade this one at all at this particular point, because this was the last of the strong pairs when it came down to making a move. And currently right now, if we look at this movement, we have the movement that we want. At this particular point, we did break the overall trend line of this overall move. Now we're looking for the retest. Now, there wasn't that much of a retest on this move at all when it came down to this pair. And remember, like we talked about before, once this market ends up breaking below 6,700, we wanted to be able to look at being able to sell it down to 62. What I'm looking for right now is that are we going to end up getting a point to where we can be able to look for a retracement? Is it going to give us a retracement? Currently, right now, we're at an A move right here, meaning that we hit a double top in the market. This broke down. It hasn't retraced. It hasn't done anything else like that. So The only way that we can be able to make anything off of this is that we have to be able to see 2 candlesticks start to go back up and start to see a little bit of a retracement to the upside. If we can be able to catch it right around the 6,700 area again, then after that, long-term trading will take us all the way down to the 6,200 or even below when it comes down to this move. And that would be the first transition that I think that the market could be able to go to. Now, with that being said, that's my time for today. If you like what we end up doing, please make sure that you like the Carter Cow Capital business page. Carter Cow Trading business page. Please make sure that you subscribe to Carter Cow Trading. And please make sure that you end up tapping into our videos that we end up doing each and every day. For the people that are on Instagram, I do appreciate you being able to hang in with us and being able to go from there. Remember, we're going to end up having our 5-day Forex Bootcamp on October 2nd to September 28th to October 2nd. We're going to talk about some of the trades that we end up doing at this particular point, being able to break those down, being able to help everyone out when it comes down to learning how to be able to do this. Understand this. I'm mad about being able to pay off my mortgage if I wanted to. I want you to think about that. I'm mad about being able to say, hey, I made more than what I get paid from my regular 9-to-5 job. Think about that, right? That's what I'm upset about. I'm not upset about losing money. I'm upset about I could have made more when it came down to this point. We did very well on the NASDAQ. We did very well on the NASDAQ, but missing out on overall trading when it comes down to that, right? So take the time to be able to invest in yourself. Find a great mentor when it comes down to overall trading. It does not have to be me. There's plenty of other people around. I just have a structured way of being able to do this, and I've been teaching people for the last 3 years on how to be able to do this, right? That's something that you can be able to do when it comes down to that. But other than that, I'll see each and every one of y'all a little bit later. Once again, believe in yourself, change will come. And understand that if you end up planning your trade and trading your plan, you'll end up being very well when it comes down to it. Like always, I see each and every one of y'all going into tomorrow for Friday's trading. Probably it'll be a little bit lighter trading than anything else like that, but we will take a look at the chart.